It's a little windy today. Day 2 of my 30-day vlog challenge. So today's question is buying stocks gambling? Just the short answer is, well, it can be, just like anything else. If you don't do the proper research and you don't know what you're doing and you're just buying a stock based on what your friend or your family told you or someone online told you, yeah, that is gambling. At the end of the day, if you buy an individual stock, you need to know what it's worth. Because if you buy a stock that's overvalued by like 100% or 50%, it could go down in the next year or so and never recover, and you will never break even on your money. There's ways in the stock market where it is not gambling. For example, buying an index, which is a basket of stocks, such as the S&P 500 or the Toronto Stock Exchange. Just a collection of stocks that are already curated for you based on revenue and profitability. It just really pains me to hear that, when people think that the stock market is gambling. If you're watching this video, the reason that you're not invested, if it's because, someone told you to avoid the stock market because it's gambling, I mean, I get it. I do get it, but it pains me because just because of a few bad experiences, because people don't know what they're doing and they expect to just buy a stock and as it's going up, if they can just ride the roller coaster, that's not investing. So I had this conversation with my uncle probably a year ago. He asked me if I had money saved, and I told him straight up, in this brief window of my life, I was just completely transparent. With every time someone asked me a question, I was just completely transparent, even though regularly I would just not reveal that kind of personal information. But, I'm sure a lot of people will be like, yeah, I do have money saved. But to be honest, I didn't at that time and I told him straight up, once upon a time, I technically didn't have it, but I could have had $100,000. I had made $100,000 in the stock market in terms of unrealized gains, and I guess I was just completely transparent with it. And then it wasn't like I lost $100,000 of my own money, right? That's a story for another video. But as soon as he heard that, he thought I probably saved $100,000 and dumped into the market, which is not true. It was probably like $5,000, which ended up becoming 100 for me, which is a crazy story, and it probably sounds unbelievable, but it's true. And that's the kind of things that can happen when you buy penny stocks. And I did a lot of research before I got into that, but that's, again, another story. He immediately told me, hey, me and all your uncles and the rest of your family, we experienced this. We did the same thing. We made a mistake. You shouldn't do that because it's kind of rigged, and the people at the top make all the money, and you're not gonna be successful. And I just smiled and nodded. That is true. If not for the internet, if not for the ability to learn these things on your own and be genuinely curious and learn the right way to do things versus the wrong way to do things. And that's what I ended up doing. Just like everybody else, the reason you probably didn't invest is because somebody just similar to my uncle went through an experience that was horrific and traumatic, and they didn't see it coming, and they got just wiped out. Absolutely, right? And then you just avoid it altogether. But the thing is, the S&P 500 has done I've said this a million times, but to different people, but the S&P 500 has done 8 to 10% annually since its inception, and that's compounded. And I'll have a video just specifically on what compound interest is, which will kind of tie everything together. The S&P 500, you can buy it with the ticker symbol VFV, which is an index ETF, or VOO, which is the US dollar version of the same thing. It has done very well. If you look it up, I'll put it in the video here. I'll put it on the screen, but over the last 5 years, or even the last 10 years, it's done very well. And is it overvalued a little bit? Yeah. Is there going to be a market crash probably coming up? Yeah. Is it better than doing nothing with your money and losing the battle to inflation? Yeah, 100%. When you buy a mutual fund, you're essentially doing the same thing except paying higher fees. There's so many people that are in mutual funds. Not that there's anything wrong with it, right? It's better than doing nothing with your money. And the thing with the stock market is it's liquid. You own 100% of that asset. When you buy real estate, you are a minority partner in your house. I understand the power of leverage and everything, but there is no debt associated with it. There is no interest associated with buying an index ETF. And now that we have, platforms such as Wealthsimple in Canada or Robinhood in the United States, there's no commission either. But yet people avoid it. Maybe it's because they want to get rich tomorrow, and an index ETF of the 500 best companies in the world is not going to get them there. People will be quick to put their money into betting on sports. It's the same kind of concept as there's no real barrier, right? Nowadays with apps and all that, that's 100% a gamble. That literally is gambling, and people will do that all day long, but they will avoid the stock market. But I think it's because of the lack of education and lack of knowledge, right? If you're watching this video and I'm not saying go and buy VFV. I have a video about it on my channel. I'm just trying to put information out there. I just think that everyone should at least have someone to tell them this in their life, you know, because it can make a huge difference, right? Over time. You buy, like, a share right now is like $130 Canadian. You've probably heard of AI and, like, you know, the whole AI revolution and, like, you know, Nvidia stock going up $300. Well, I mean, people who bought at the absolute high probably already got destroyed. The thing with stocks is you need to know how, like, what the stock is actually worth. The stock market is, in the short term, it's a voting machine, and in the long term, it's a weighing machine. Meaning that in the short term, you know, the market, it's based on what the market thinks is worth. There's a lot of manipulation. There's a lot of different things that are going on in the short term. So, you know, the stock can go up for no reason, it can go down for no reason, and news will follow, and it might not make any sense. But over the long period of time, the market will always correct to what the business is actually worth. If you don't know what it's valued at and you just think, oh, okay, let me just buy this stock because it's going up, that is the absolute worst thing you can do, and that is gambling. If you ask somebody who got into mutual funds or the indexes, bought an index 10, 15, 20 years ago and see how they're doing, they're probably doing pretty great. And, you know, the stock market is not about buying and flipping and getting in and out. Like, I mean, you know, people do that for a living, and that's called day trading. But your $200 a month, depending on how old you are, invested into the S&P 500, by the time you're 40, 50, 60, could be worth well over $1 million.